We should be live right now. Test mic, 1, 2, 3, test mic, test mic. Alrighty, think we cool. How's everybody doing? Hope everyone is fine. Bit of a weird time for most of you, at least when I'm streaming. It's late afternoon here in Asia. Should be somewhere around the afternoon in Europe, and America is still asleep. But you can always rewatch this. No worries, no worries. I had lunch earlier today. Delicious, and now I'm having nice coffee, so if you hear me slurp, then that's what it is. Salt coffee, salt cream coffee to be exact. What an invention, I love it. We had a very interesting week actually for the markets. We're going to look at a couple things. First of all, do you like the thumbnail? I just took a regular picture and put my own hat on there. I thought it was funny. Let me know if you guys like the thumbnail or not. We're going to look at the regular stock market. Gold is breaking out. We had some very interesting news. So yeah, it should be fun. It's a bit more of a relaxing, chill out stream. We're going to look at some assets, but it's more a bit chill out. Kind of the question where we are right now for a lot of assets is the last 24 hours and today, is that consolidation, and are we going to squeeze higher maybe during the weekend, or is this a temporary top and are we going to see some downward action, a little bit of a correction, cooling off before entering higher, or maybe are we going to dump, as some people say. It's unbelievable. By the way, yesterday I saw the same fucking retard on Twitter. Was it Twitter? Yeah. Constantly yelling that we're going to 44k. Matter of fact, we're going to pull the motherfucker up before we're going to look at some of the charts. I find this guy such a fucking retard. Unbelievable. Where's the guy? So he has almost 140,000 followers and he's calling for 44,000 order rate for I don't know how long. Could be. I just think that the chances from here on are relatively low, and all he posts is it's game over, bulls, we're going down, blah blah blah. Constantly posting these dumb pictures, AI crap. How it's just only gonna go down, 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 and this is already going on for, like, what is this? Any retard can draw this line and say, yep, that's where we're going. This says nothing. It says nothing. Every kid of 12 can make this. I mean, and therefore it should not be true. Just because you're able to put a line on the chart. But let me see. What's the engagement? Oh, here it's not even that much. There are these tweets that have thousands. I mean, look at this. 86,000 views. This shit is retarded. It really is. and just because you're calling for super bearish targets, I can also post pictures only of we go to 100k, 200k, whatever, and that will farm so much engagement because that's what everyone wants to see in here, right? You want to have your banks pumped by tomorrow, preferably to these crazy levels. I have seen multiple of these people. So actually, Twitter sometimes is so unbelievable toxic. Where do I have it? I mean, the guy's just constantly memeing. It's, yeah, I mean. Also here it's exactly the same. It is possible, but like I said, any retailer can draw something like this and say we're going to 44k. There is no TA behind it. The problem what I have with these kind of people is that if you have a big following, 100k plus, is that if you could start mentioning these kinds of things, people will also put positions into that direction, saying I'm gonna short more than I'm gonna long because I see this guy who maybe makes a lot of money or don't, and therefore he must be right. And you are the liquidity then. If we're going up, your shorts are getting wrecked, your shorts are getting stopped out. So you might be the unexperienced trader. Here's again another one for 5 September, which goes on and on and on. You are maybe the uneducated or unexperienced trader thinking this guy made a lot of money or didn't, and they think, oh, he must be right because he's making so much money, so he must see something that I don't. And yeah, I just find it unbelievable toxic, very bad. There's just no sense of responsibility there. That is kind of the thing. And you could also say, well, eventually it's you pull the trigger and not someone else. So if you follow it, then you know it's your own fault. On the other hand, I do think like if you have a big following, for whatever reason that is, you should be relatively responsible and not just be focused on one thing only. Let me take another sippy of my iced coffee. So what we're looking at, by the way, is not Bitcoin, but it's actually the S&P 500, and that is actually also what I want to refer to in the thumbnail, is that new all-time high is confirmed. I did not actually mean Bitcoin, but for the S&P 500, because we had some very interesting price action. Did not upload or record a live stream yesterday because I was a bit too busy during the day, and I didn't want to do it anymore after New York opened. I also went to bed on time. But Wednesday, when I had the stream regarding the CPI, a bit after the CPI came out, not all too exciting. Regular CPI was exactly as expected, and core CPI was 0.1 or 0.2% higher than expected. So core CPI is CPI inflation data, but then I think excluding the fuel, food, and housing maybe. There are 3 components. The interesting thing is, so that is this, we are now right here on the daily, that is this thick green candle with the big wick on the downside. Oh, you can take this off, by the way. And you know what, actually let's look on 15, that's maybe a bit better. Now to give you an idea, if I'm trading this on the future market, if you've never been trading this, please don't touch it. This is a whole different beast than crypto. Actually, matter of fact, we're even going to do the 5 minutes so that you guys can clearly see what I mean. There we are. So this is when the news came out. You see this dump lower, and then right away it moves up again, and it takes out all of these local highs here, and then eventually it dumps lower. Well, sometimes you see 1% or 0.5%, and then you might be thinking, well, that's not interesting if crypto does multiple percentages a day. The thing is that this doesn't work on percentages, it works based on ticks and points. So if I now pull this, you can see here 81, that is 81 ticks, and it represents 20 points. 4 ticks is 1 point, and every tick on a regular contract, if you just buy one mini contract on the S&P 500, is $12.50. So if you have one contract on $12.50 and you have only 10 ticks, or it goes up or down, only 10 ticks, then you have 12.5 times 10 is $125. So if you then have 100 ticks down, then you already right away hit $1,200. So that is a lot, and especially some people trade multiple contracts. So yeah, this dumped within 1, 2, 3 minutes within the news. And if you then go down $1,200 times 2, 3, 4 contracts, you're right away talking about $4,000, $5,000, $6,000. So that goes very, very fast. The interesting thing about it was that right after we rallied up, so we kind of reclaimed what we lost there, and then right at New York Open we dumped down. So what does it say? Well, we had the initial news, we had the initial impact, and then right away the market starts selling off until halfway of the session. And for the S&P to dump down 1.7% is way above average. The average move of a day is about 1%. And for the Nasdaq it's a little bit higher. And then we are making this bottom here, and then we are rallying up. And that was a huge rally until the close, more than 2%. That is, let me see, Wednesday. Oh, was it almost 3% for the bottom? Yeah. So about here-ish, 2.5%. So this was 500 ticks, more than 140 points. How is that? 560 ticks. Let me check real quick. $560 ticks times 12.5 is 7,000. So if you did this on one regular contract, top to bottom, would have been $7,000 times 1, 2, 3, 4, 5 contracts. It is a shitload of money. Anyways, so just to give you the perspective and the idea of the incredible move that we had on Wednesday, this is very unique. Matter of fact, if I zoom out back to the daily, and we are going to reset the chart. Alright, so it is this candle right here. We have this bottom and then all the way up. Where else do you see such a candle? This red one, yes. But other than that, actually, it is very hard to find something. This is much smaller right here. It's very hard to find such a day in the chart, because they're pretty much going open and they're going higher, or they're going open and then they're going lower. There's nothing too special. That alone kind of confirmed that we this one is actually pretty good here. I don't know if you can see it. Let me see what was here, the move up. 700. Yeah, so slightly even more. Crazy day. 13th of October 2022. Jackson Hole? Ooh, maybe it was. Maybe this was Jackson Hole 13th of October. From the top to the bottom. Insane. If it really is Jackson Hole, man, then I have a good memory. Anyways, so yeah, as you can see, I need to go back all the way to 2022. This is also a very big candle right here. So very unusual price action and a incredible strong buyback of the market. So yeah, if they then buy back and they close the day at the highs, yeah, that pretty much says that the news is completely disregarded, priced in, we're still going higher. Of course, also election year, United States. That is traditionally, yeah, markets are going higher because politicians want to show, oh, the economy is great right now, vote for me. And yeah, it's also a little bit of a self-fulfilling prophecy, but actually the stock market is not a representation of the real economy at all. But it is seen as something like that. Oh, the stock market is going up or is higher during the election year. I should vote for this and this person, Biden or whatever, because they make the stock market go up. Absolutely bullshit, not the case. But you also see now for this year already that the S&P 500 is up more than 15% if I'm not mistaken, which is also way above the average. Oh, we'll check that later. So yeah, and therefore I'm also thinking that some traders maybe trade towards a certain bias because it is an election year and maybe not because of the underlying value. So yeah, with that being said, therefore I'm thinking that a new all-time high on the S&P 500 is pretty much guaranteed from here. I was actually really hoping that this would do this, especially when we went down. I thought, ah, nice, we're going to take out this low and maybe create a higher low somewhere here, or even take out these lows right here and then to go higher. That would be actually very nice. But yeah, it already happened much faster, so the retrace here was relatively small. It's funny, people start to panic then right away, and actually stock market only goes down 4%, but see people are panicking, and then now within days we're just going higher, higher, higher. This is just green, 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 green. No way of not a good idea to short this. I do also have to say that once we put this high in, and this was a slightly lower high, I just expected one day candle wave, bam, taking out these highs and this top right here, and then just create a new all-time high. That didn't happen. So also here I got slightly surprised, but other than that, yeah, it is what it is. Don't fight the trend, don't fight the market. And I think this will now go higher. Would we now again roll over? I'm gonna laugh my ass off then. Very, very much likely you're gonna take this out and you're going to revisit these lows. But for now, actually looks good. So I think a new all-time high is pretty much programmed here for the S&P 500, and it will not take long. And the Nasdaq will also do the same. Matter of fact, let's look at the Nasdaq right now. Yeah, so that has not taken out these highs yet, and this is a little bit further, but yeah, with some of these stocks, if they run, like Nvidia. I tried to short Nvidia the other day. That was not a good idea. Oh yeah, this is my TI. Let me show you what I've done. So this is Nvidia on the 1 hour. In case you're wondering, by the way, what are these gaps? That is the difference between the open and the close. So this is the close of a Monday, this is the open of Tuesday. The difference between is just the opening gap, and therefore you have on some of these days these gaps. And now this gap is filled because the price action went there. We went into the golden pocket, which I initially longed. Let me see what I have here for volume profile. Oh yeah, underneath. So I longed this initially, and the idea was to at least stay profit then here and above these highs right here at the very low. But then we rolled over and then rolled over again, and then I closed the trade, and then you can see that we are trading underneath a little bit. We're having this gap right here. I'm gonna zoom in. 1 second. Had this gap here, and you can see that this candle right here of this red one is filling up that gap, and then it's right almost to the dollar, and then we're going higher. So nice reclaim, bit of a choppy action, and then we had this hour candle, 1 hour candle right here, taking out all of these highs, and right away getting that hard rejection. Now I waited a little bit and then went lower even more, also filling this gap. I waited again a little bit until we were somewhere here, and this would have been the moment to reverse. There was a technical level, and I shorted because I thought, well, the liquidity is taken here on the top and we still have liquidity here on the bottom, and I had 2 SFP levels. I thought that would be a very nice target to get to, also good risk to reward. But then we went higher, so I had to close the trade here on top. We reclaimed the level, closed the 1 hour above. That was my invalidation. Thought if we're going to do that, most likely I'm on the wrong side of the trade, so I need to close it. That's also exactly what happened, and you can see we're just slowly marching higher, 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 and now finally we're finding some resistance at a daily level and at the point of control. And you can see that the that means the pre-market, is right now trading ever so slightly lower than the price from yesterday. Nothing too special, doesn't mean that we're gonna go lower right away, because a lot of times we open and then right away trades higher, 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 and you can just take all of this out in the first 2 hours. So the first 2-3 hours on the stock market Those are the most important. I actually also think that here, since it is such a hot stock, so popular, there are these insane promises about what they're going to deliver for AI that yeah, I think that this will be traded higher, and we'll soon gonna also see all-time highs here again on Nvidia. This is maybe a trend line that you need to kind of keep in mind. It's not so nice actually. Something like this. But yeah, I think this is, I mean, this like a bigger time frame liquidity and a good reason to go higher. Nothing special. Once we can reclaim that point of control, then we can go higher. And I think that could also be a long trade. There are two long trades actually here. If this looks so bullish, this is one of the most bullish stocks at the moment. This could beat something or higher, and then this is your entry. I really want to see a backtest, because if you're longing right now, you're longing straight into resistance, the daily and the point of control, and you already just traveled some space up, so you're pretty much longing now the top here of this move, so you want to see this cool down or backtest something and then to get into a trade. So far this looks good, and Marks FB actually also looks relatively good. Money flow still in the green. This might do one of these, whoop, and then the hourly, bam, and then you're off to the races, and then for the next couple days it's long again. But since I closed the trade here, I did not want to long right away. I want to see this play out, because you can also see that some of the key levels, they take quite some trading, sometimes 2 trading days. This is coming here on Tuesday, we stay here during Wednesday, even Thursday, and then finally you have that rollover, and the reclaim then is then pretty much on Monday, and then eventually go higher. So this just moves much slower. These bigger stocks move much slower than crypto. Also here, this top forming of the top, you feel like, oh, this was the top right here. Let me zoom in. So you might be thinking, oh, this was the top. No, just kidding, this was the top. Oh, okay, fooled you, this was the top, and then eventually you're rolling over. So then you have a top forming of 8-9 days, right? So again, takes much longer. These bigger stocks, high market cap, they take much longer to form certain tops and bottoms, but also gives you more time to get in and to get out. Your invalidation will take probably a little bit more time. My invalidation for this one was relatively short. It was the same trading day, but yeah, therefore you need to give it some more time and space. And for crypto, you usually know pretty fast when you are on the right side of the trade or not. You know what also made a new all-time high yesterday? Gold, baby! As I said in a live stream 2 days ago, is that I own gold stocks and silver stocks and other commodities. I mean, this is a breakout if I've ever seen one. My lordy. Beautiful. Beautiful. Everything, of course, here is sentiment driven, based on the idea that the central bank, the Fed, is going to lower the interest rate in a couple days from now, a bit more than a week. Why is that great for gold? Because money always flows from one thing to another. If you rise the interest rates, therefore you also have a higher interest rate on your mortgage, but also a higher saving rate. And it is interesting for people to start saving money, again, and therefore money flows from the stock market or maybe crypto or whatever that might be into savings. But if the interest rate is gonna come down, then you're getting less of a reward, right? That's your interest rate on your savings. So therefore people are also looking for more risk assets, and also a bit more safe haven. So gold usually is a safe haven. And we're thinking, well, if the Fed needs to start lowering the interest rates, they're only doing that when the economy is slowing down, and they want to give a push to the economy. And oh, then something might be wrong. Oh, then we need to get into a safe haven. That's also one of the reasons why gold is going higher. But of course, the underlying inflation, like this can pop up anytime again, is also a reason for people to buy more and more gold. On the daily, this looks Absolutely beautiful, very nice structure. It gives little room for people to get into a good long trade. There are these retests and these bounces. I mean, I can see them right now with the naked eye right away. I mean, this is, I'm just gonna do it real quick. I mean, look at this, super nice back test. You have a high, you reclaim it, back test, higher low, higher. This is 1, 2, 3, higher, back test, 1, 2, 3, breakout, retest, higher. I mean, this is as technical as it can be. Very, very nice. I'm not trading this actively. You could try it on a Gold Sprinter, Turbo, CDF, whatever. I am just more interested in these gold stocks because they have a leverage compared to the gold price, like I said a couple days ago. So if gold is rising 1%, usually these gold stocks are doing 3 to 5%. That is kind of the average, the leverage. I'm having everything on spot because these things move just like altcoins, up and down, up and down, up and down. If there's something with a result on drilling, on, I don't know, inventory prices going up, going lower, suddenly they are digging for gold and they're finding silver, and all of that crap can have influence on these gold stocks. So I would, if you're ever interested in this, I would say absolutely do not trade this. Excuse me, do not trade this with leverage, but just hold them in spot. But so now and then I look at the spot portfolio and I saw a 3 to 4% increase day over day, yeah, from one day to another. And I thought, well, that must maybe because gold is rising, and that's exactly what happened. So now we had a very nice breakout here. So this looks good. I had an overall target for approximately $2,500 for this year, and yeah, we already made it. So everything above 2,500 is just a nice bonus. Who knows, we're going to 28, there's also another target, and then maybe back to 25 to close the year. That could also be the case. Let me see, what do we do on, where do we start this year? Yeah, this was kind of the dream when I started buying these gold stocks in 2016, was it? One second here. Is my Wi-Fi off? No. No, should still be working. Okay, just kidding. Yeah, so this was kind of the thing that I was looking for, I was hoping for when I started buying these gold stocks, is that gold would really outperform the stock market, crypto, the commodity market, so much faster than oil and I don't know what. I've seen so many reports and stories and comparisons that I thought, this is a done deal. This is done. We are going higher. There's no way that this is going to fail. Based on the policies that were just being rolled out since 2016, right? With all the QE, the printing and everything. And I started buying somewhere here in this range, so this was just headache. Look at that, all the way to 2019, flat, nothing. Once I saw the reports and saw all the theories and explanations, and I thought, done deal, this is it, we're going higher. I thought there's no way this story cannot be true. I started buying here after already move up. I thought, okay, this is it, we just had a nice run to the downside, we're going higher again, especially when it started printing, and then we went sideways, and then for 3 years nothing happened. Well, I'm already balls deep into this anyway, so I might as well just hold it. And yeah, then finally we had that run up, and we had that first kind of touch here at 2000, taking out previous highs, run down, and again at the exact same price level went down. I was like, you gotta be kidding me. And then for the third time I was like, no effing way, there is something like a triple top does not exist. No way. And then a few months later, finally, so we came down again. I mean, folks, you had to have a lot of patience with this. Almost 1200 days, so again, almost 3 years. Yeah, So you have a run up, you have consolidation, run up, consolidation of a couple of years, and then again a run up. So yeah, maybe I will sell some once it starts cooling down again and we're getting into consolidation, because this just moves much slower than stocks or crypto or whatever. I don't know if I can handle another 3-year consolidation. Oop. So yeah, we'll see. We'll see. I had an alert. Let me check that real quick. Okay. Not as strong as gold yet, but because we haven't taken out these highs, we haven't closed above. But yesterday went up 4% on silver, 4%. Here we're at 6%. These days 4% are also on the upper range of daily results. Usually that's somewhere 2%, less than 2%. 3% is already a good day, 4% is yippee-ki-yay. So yeah, happy, it looks good. Portfolio had a nice uptick, so happy with that. Alrighty, shall we look at some altcoins, crypto? Let me know in the comments what you want to see, what you want to... Bitcoin, I see Mr. Bakes, we're going to look at BTC. Yeah, let's do it right away. Because actually it looks relatively healthy still. There are a few things that concern me. This is actually also a good prime example. I'm keeping this on why I do not believe in the 44k, because this is just kind of a rotting wedge, and as long as this doesn't break, and as long as we're holding these lows right here at 52 or the current lows or here, I'm not too worried at all. Okay, for the local price action, so for today and into the weekend, usually I do not trade in the weekend because volume is low. Scan wicks, sometimes you're looking at really paint drying, it is annoying, so I just rather take the time and chill, recharge, sleep in, do nothing. We're going to clean this up, we're not gonna need any of this anymore. On the 4 hour, real quick, this pretty much is a confirmed bearish divergence, momentum wave going lower. You see that price is going higher. However, it reminds me a little bit of the price action that we have seen a couple months ago when we're in a bull run, is that you have a very long consolidation period, right? And that is actually this, because let's be honest, this is all it is. It is just range trading from top to bottom, from bottom to top, and it is extremely exhausting for a lot of people. But actually it's exactly what we needed after such a huge run up. And I know there is still so much liquidity underneath here, underneath these lows, and yes, there's a case to be made that we need to have a major correction, but actually that is the theme of this bull run, is that major corrections to the downside actually just do not happen. So now what we see most of the time is corrections in the factor of time, and I know that's a very hard concept to understand, but what it means is that price is just being held up by buyers and sellers at the exact same time with approximately the same amount of volume, meaning there are approximately the same kind of buyers than there are sellers, so price is going sideways. Only when you have very aggressive buying, then price goes up, or if you have this is nice. Actually, I'm long now on BNB, so ignore this alert. We can look at this in a second. So, or you have a squeeze up, and then there are positions closing. That is pretty much the same then as more aggressive buying, because if you need to close your short position, how do you do that? By buying back. So closing the short position is a buy. So therefore I'm not concerned at all. The only thing is that so far some of the indicators are not really helping, but like I said, this actually reminds me a little bit of these bull runs up that we had in the past, or last year. You have a green day here. Look at this number that you see here on top. 0.8%, not a whole lot. 1.25, not a whole lot. This one was already bigger, 3%, but in the world of crypto, nothing too exciting. 1%, then we only have 0.5% down. This was a nice buy up of that candle. It was the exact same day the CPI data came out. Give me music. Thank you. And then we have 1.4, and then we have 0.3 as of today, but of course it can still change. Not all too extreme, not so much out of the ordinary. However, if you would just hold your trade, you're actually now already looking at 7%. What I'm trying to say is that this slowly creeps up, and then suddenly you get these bigger moves on a daily candle. 3%, next day 4%, next day 5%, next day 4%, again 5%, 4%, 6%, 7%, bam, 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 and then you have these back green candles, and they're like, oh, whoa, 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 and then everyone is rushing into the market and try to get in because they're having the fear of missing out. Now, of course, I could still be wrong. Macro structure, we still are still very much in a bearish market structure. I do not get tired of repeating this, but in case you missed it, you have constantly lower highs and lower lows, and this is still lower high. This could be your first higher low, but we actually first need to take out this high right here at 64, 65. Once you close there above, let's say 65k, good volume, that would be nice. We're back on. Bull market is 100% back. The only thing is then, if you then still need to get into the market, I mean, then we already went up more than 20%. Therefore, I'm saying don't be so bearish at the lows, because you shouldn't be bearish at the bottoms. You should be a bit more bearish on the top. That doesn't mean short every top and long every bottom, but you should be looking for more longs at the bottom and looking for more shorts at the top. And but just following the channel and subscribing, you can already you're getting so many trading setups from me. All right, cool. So for BTC, I still have this short trade that will most likely be a scalp, and that is with the idea that we're taking out the liquidity. By the way, we're now on the 4 hour, taking out the liquidity, all of these highs. Now, so far we have taken out already quite some. So this, let me see, until here is still on the table. But I said already, once this goes, it goes, and it can be a squeeze up. So actually, also for BTC, if the price really wants to fuck us over, it's gonna happen in a weekend. And since there's no volume, it can happen very fast. You need to think of it like, if market makers, bigger players want to move price or want to attack, when do you attack the enemy? At the moment that they're asleep. So you're doing it in the most impossible times, when New York is already closed, the big money is out of the market, right? Pension funds, banks, hedge funds, they close at the end of the day. Usually they leave barely any money on the table, they cash out, and then when you have low volume, you don't need a lot of buying pressure to push the price higher and lower, and therefore sometimes you have these crazy impulses during the weekend. Now, for now, so far, a lot of weekends we already did not get a whole lot of action on BTC. Sometimes 1-2% from the top to the bottom. Okay, that's fine. Again, I'm not trading it, but it would not be out of the realm of possibilities that, since you are so freaking close to the liquidity here on the top, that you just push in 100 or 200 million, which is nothing for these kinds of parties, to push price higher, and then you're getting also the liquidation of all these shorts, and then before you know it, you're up 4, 5, 6%, and they cash in a shitload of money based on these liquidations, like I said. So I wouldn't be surprised if we're getting a squeeze up. Now a bit more hands-on, like, okay, nice story, Ray, but how the hell can I trade this? If you're not in a trade, I would wait for New York Open. So far, trading session has been very flat. Yesterday it was also very flat. Usually we're also just building up momentum to get a bigger move. So price goes sideways, and then you know, everyone's falling asleep. It's nothing to do. When is it moving? And then you have some of these retards who are posting, yeah, but I made this amount of money and this amount of money. All bullshit. You know, maybe they got stopped out 4, 5, 6 times before they finally got into a trade. If I see it and if I look at price and say, okay, we haven't moved at all in the last couple hours, I'm just switching assets right away, and then I'm usually trading the futures, like I just pointed out, which is trading based on points and ticks. But you can also look at alts. But yeah, always know that if something happened on the future market, like the data came out on Wednesday, you right away see a move down. This candle right here on the 4 hour was the exact same time as when the news came out, and later on when the S&P 500 took that dump that I showed you at the beginning of the live stream, it was the exact same moment. I have been saying this already multiple times. Have 2 screens for fun. Do not trade it, just look at it. You can, I think you can already do this on a free plan. Look at this, 2 screens, and on one side you will have the future market. Take ES, that's the S&P 500 or the NQ, and have it next to each other. BTC on one side, S&P on one side. Take the exact same time frame, so 5 minutes, 5 minutes, or 1 hour, 1 hour. But usually it's better if you take the bit of a smaller time frame. You can even take the 1 minute, and then you see once the S&P is going down, you see Bitcoin going down. If the S&P is going up, Bitcoin going up. Now, that's not every second, every tick, but if you see one of these bigger moves that I just showed you, is exactly what you see here. Guaranteed. Matter of fact, I looked at both screens when it happened. If this really is bullish, we do not get a very big retracement. This was a trade to get into. So this is actually the trade that we talked about. I said already about a backtest. This was the first candle. Matter of fact, let me zoom in on the 1 hour where we had this long trade. And I said, well, it got tapped and then went higher. So I did not take this trade. And I said, well, if you get another move in and you get something like a nice bullish divergence, then you're going higher, well, then you can take that trade. Perfect. It also played out exactly as we discussed, but I did not take the trade because, like I said, I was trading the futures. And I have the nasty habit that if I'm trading one thing, I cannot focus on 2 assets that trade a complete different way, where you have to look at complete different factors and then trade them at both at the same time and keep an eye on them. So if I'm in one trade of one asset, in this case the futures, I will not look at other stuff like Bitcoin. I do, however, trade Bitcoin alts at the same time because those move and trade the same way with invalidation, get in, get out, targets, leverage, all that kinds of stuff. But again, for the future, it's very different. So this could have been your long trade. If you're in it, of course, you should have taken profit already, but I would say leave something on the table because the retraces so far have been very mild, and I wouldn't be surprised if you're going to see this. We're going a little bit higher, a little bit higher, a little bit higher, and then suddenly you're just blasting off, and then you're happy that you already took a position. This is pretty scary then. I have burned my fingers also a couple of times on this. So let's say you were able to long here at the bottom, and then you're going up and you're coming down and you're almost coming down to your entry. Like, oh fuck, okay, you know what, I'm just gonna move my stop loss here, and then if I get stopped out, fine, at least I'm not losing money, it's fine, it moves over. And then you get another impulse of, ah crap, and then you're longing here again, and then you see eventually that the price is again almost coming back to your entry, and then you think, oh man, it happens again. Okay, now we're going to roll over, and then you're moving your stop loss, you're gonna stop that again, and then we're going high. And then if you then look back in time, you would be thinking, oh man, if I just got into the trade right at the bottom and just kept my stop loss there, then eventually you would see the price goes higher, and then you see that squeeze up, maybe based on liquidity that I just showed you, and you get this bit of a rounding bottom, and then it's parabolic up to the upside. But the last big move, that is usually much later than the best time to enter the trade, which was then approximately somewhere here. So I just want to give you that as a takeaway. It is a certain fear that I also sometimes till today still struggle with, because I like to move my stop loss once I'm in entry. Not always the best idea, because actually it is better if you move your stop loss after you hit a first take profit, which in my eyes would always be based on support and resistance, something that you can see in the charts. So therefore I'm always saying look left. If I would have taken this trade right here that I just showed you, that I also gave to you here for free in a channel, my first take profit would have been here on these highs, right? Because you can go to these highs and then just dump down again once you take that as an SRP. So that would have been my first take profit. Or here, that would be also a good place to take profit. Let's see if we get a move down today. Let's say the move let's say the move down is relatively mild, then I would get in on the 0.5, not the golden pocket. Few reasons. This actually is nice. So as you probably have noticed that I constantly talk about liquidity, because liquidity is what moves the market. But if we are, let's say, making a move down, then I want to see this being taken out, and then the 0.5. Why? For some trades, and this is just also experience, you will see that people are always trying to trade to a certain level. For example, the golden pocket, and if it lines up with something else, that would also be my preferred level. But now you already have taken all of the liquidity in case you hit the 0.5. We still have that very high volume node that acted as support and resistance a million, billion, gazillion times already. I can constantly keep showing you that on the chart, but it already was support and resistance so many times. So you're also then keeping that level, and it's nothing more or less than actually just a back test. 0.5, take liquidity, high volume node. So I would then try to enter from approximately 57k and keep a tight stop loss, because the second entry is then of course the golden pocket, which is then 56,700 to, let's say, 56,500, and then you might have the 78.6. But if this is really bullish, you actually do not want to see it retrace all the way here, because you do not want to give late longers the opportunity to get into the trade to enjoy the squeeze up. So you need to play something that very locally, and something that at this point of time doesn't make a whole lot of sense. And once you eventually reach the highs, right, once you're really going to 60, 65k, then you want to see a bigger retrace, then you want to see a key level, and then it can be a golden pocket or something else. But for now, the way this is setting up with these kind of tricky moves, because you really need to get in here, snipe it, and then to go higher. There was not a whole lot here. There was something, we can look at it in a second, but actually there was not a whole lot here, but it was the entry actually for this move up here on Wednesday. And there you can see, let's say we are squeezing this weekend up. What was the ultimate entry here? Wednesday. So 4 days before the weekend, right? If let's say we're squeezing up on Saturday or Sunday, 4 days before was then actually the perfect entry to get into this trade. Right now I am not in a long because I missed this one. Like I said, I was trading the futures, and yesterday I did not trade Bitcoin. So just like you, this would be my plan for today. I am going to keep an eye on this, and if we're coming down, then I will take the trade. Another option would be not ideal, but I'm gonna give it a try. Let's say we're not gonna go down, we're just slowly chucking higher. That I want to see that we are taking these highs. Whoa, that was the wrong tool. That we are taking these highs and that we're getting something of a back test. And then, yeah, unfortunately, you need to keep your stop loss a little bit higher. Now, why is this not really preferred? Because we have the liquidity on top. This can just squeeze up. There's no back test. We're just going. Yeah, unfortunate. Then you miss it. But also, if you get into a back test and you're getting somewhere here, you actually need to keep your stop loss underneath the last low. So that will be then, let's say you're getting a perfect retest here of these highs, 58,500. You need to put your stop loss at 57. How much is that? 1.5%, 2%? Yeah, 1.5. And I usually like to take stop losses for BTC 1%, 0.5%. Sometimes I even have 0.25% stop loss before from getting stopped out. Because then you can also have a bigger position size, right? If you say, I do not want to lose more, let's say you have $1,000 in your account, I do not want to lose more than 1%, which equals $10. It doesn't matter how much percent it is, whatever percentage it is, that needs to represent that $10. So if you have 1% stop loss, then that is your $10. And then you can, let's say, put on, I'm just making this up, let's say then you can put on $100 on the trade if you then hit one 1% is that $10. But if your stop loss needs to be, for a technical reason, 2%, then you cannot put $100 on a trade, but only $50 on a trade, because your stop loss is much wider. So that is very important that you understand that principle. Therefore, I like tight stop losses. Now, that also works sometimes against me, that I'm getting stopped out earlier than I actually want, or I'm getting stopped out before the move happens. All part of the game, but sometimes I have incredible runners, and then I'm risking maybe 1%, 1.5% of my account, and I gain 6, 7, 8, 9, 10% on that trade, and that's one single trade. Imagine gaining 10% on your account. That is what the average of the stock market is, or the average of a real estate portfolio. But then you have that on 1% on one trade. Sorry, then you have that return on one trade. It's insane. But you need to be able to find and structure your trades in a way that you are able to do that. That's, by the way, not every trade like that, but that is therefore I like tight stop losses. But you need to have very, very clear invalidation, support, resistance. You need to really be able to read candles to say, okay, this looks bearish or not. And then still you can sometimes be on the wrong side of the trade, right? Like if everything lines up, if everything is perfect, you get into the trade, you think, boom, baby, 0.2% stop loss, and you have everything planned out, then it goes slightly in your direction, and something happens with the S&P 500, and then bang, baby, you're getting stopped out. So all part of the game, Therefore, risk management, stop loss is super, super, super important. But not without any risk. For this trade, in case we're going higher, because I'm still leaning for higher, you could take profits above these highs, here, maybe even here and here. If it really is a squeeze up and you're really just seeing candles doing this, and you do not see any good retracement, right? I wouldn't take any profits, because this is also what they call a one-time framing up, where candles are just constantly going higher. They are not breaking the low of these candles, so they're not even wicking underneath. That's very important, not even wicking underneath, and then just going higher, higher, higher. I'm going to show you examples since we're talking about it anyways. The concept of one-time framing. This is how you can really see if there is power behind a move. So if you want to see, let me see if we have something. This is actually one-time framing. So you have your 1 hour candle here, then you have this 1 hour candle, which the wick is not taking out this high, and you're just going lower. There's not even a wick here. There's just right away selling, and eventually you go up high. So these 3 candles right here is what they call one-time framing. And of course on top you can also have that. I mean, look at this. What a beauty, 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 beauty. 1 hour here, we're going up. This wick is not coming lower than this, and let me zoom in. You can see that we're just going higher, 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 higher. There is no reason for you here to short any of this. This is your first sign of weakness, where you have a red candle close. I mean, the next one could still be green, but at least the bears are stepping in to push the price lower. But other than that, so you could here slowly look for reversals, not right away yanking the short, but this is kind of how you need to read it. And if you just see this going up, 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 do not short it, because you're jumping in front of a train. You are honestly jumping in front of a train. And I am expecting something similar if we get this squeeze up today or during the weekend, that you're jumping in front of a train because you're thinking, we already went up 8, 9, 10% since the bottom. This gotta be the short. This gotta be the short, and then eventually you're just constantly getting stopped out. So if you see that just one candle after another, then just ride the wave. And you could even, but this is, you need to really watch out. Let's say you missed it for whatever, you're going out now and you're coming home tonight, you're half drunk and you're seeing this. No, just kidding, don't trade when you're drunk, don't do it. But you see, let's say you see something like this, let's say on the 5 minute, and I'm just making this up on the spot right now. Let's say we are now squeezing up, right? This is it. Then you have to play this very locally, but then you're looking at, okay, I completely missed my entry, this is terrible, can I still get in somewhere? Then you might get into something like this, where you have a retest of these highs, you get into the trade, you're putting your stop loss underneath the last low, and then you just ride it to the upside. But you need to be relatively quick, and then you can also see that you have a maybe very tight stop loss. Here you go, this is exactly what I mean. Here you have a trading setup with 0.25% of stop loss. Does it always work out? No, because there's now nothing here. We're right in the middle of nothing. I would not take this trade. But if you see that and the momentum is strong, then you do not want to long here or here or here or here, because where is the high? You have no idea. The high could be here, the high could be right after your entry. So don't do that. Always wait for a retest. But yeah, that could be a way to get in. And then still, this 0.25% could equal your $10 that you want to risk on the trade. And then suddenly, with the 1%, you could maybe have $100 on the trade, right? So with 0.5%, you maybe have $200 on a trade. And with a 0.25% of a stop loss, you then have $400 on the trade. So there you can see that a tight stop loss allows you to put much more money on the trade. And if you have much more money on the trade, if it goes into your direction and you're right, then of course it is just a money printing machine. And then yeah, it can go very, very fast. And therefore, trading with a relatively tight stop loss allows you to use more of your capital without risking more, right? Because you're constantly risking not more than $10. Whatever the stop loss is, you're not risking more than $10. And you can also pump with the leverage. So that's great. And then you will have a money printing machine. Let's say I'm completely wrong and we are going lower. Really, it could happen, but so far this really just looks like it's accumulating liquidity and we're just going sideways. So I'm still more on the bullish side than on the bear side, but let's say I am wrong and we are dumping down from here. There is a case to be made, because you could say, okay, well, market cipher B is rolling over here. Money flow is already in the red, but yeah, okay, now let's just now entertain only a bear scenario. Then the only trade that I will be interested in taking is going higher, taking liquidity, closing here, and I really then actually want to see probably a 15-minute close because you already have so much time here. Probably a 15-minute candle close underneath here, and then trade it to the upside. Then of course this liquidity is a target, so that 0.5 is an absolute target. You could try to long from this area, and if else take it to these lows right here. The thing is, if you are taking out these lows, then there's also a very big chance that you're going to take out all of these lows, and then you could be trading easily up to 52. So this low right here at 55,600 is the low to hold right now. 55,600 is the low to hold. Taking that out, I think you're gonna go much slower. Are there, by the way, any other requests? Are there any questions? Is there stuff that I need to draw out, explain again? Let me know in the comments. We're going to take this one out because this one played out. Congratulations if you took it. This was just the example. Yeah, so I think pretty clean. I know this looks boring, right? Because if you measure this in time and distance, then you're talking about 3% over 3 days, which is nothing for crypto, but yeah. Something that has been weak. It's called ETH. Also here, if you measure in distance, space, you're still in long. What is your entry, if I may ask? What is your entry on? Look at this, almost 7 days, 4.8%. I'm really curious what your entry is and from which level. This, however, I have to say, looks like something that could do wham. Actually, it wouldn't be all too bad if you have liquidity here. You keep this intact, and then you enter somewhere here. Keep this low intact. Everyone thinks, oh, we're gonna go lower, take out the low, and then wham! 58k flat. Let me check that out. Did you just enter, or did you already enter yesterday? I'm curious how long you're already in that trade. 50, yeah, yesterday. Okay, so yeah, okay, so you have been in profit, constantly around break even a little bit, got some heat. I wouldn't be all surprised if you get some more heat now next couple of hours until New York is open. Could still do something like this, maybe even take out these ugly lows here and then quickly reclaim within, let's say, an hour or so. I wouldn't be surprised if that happens. Keep an eye out on the S&P 500 because that thing looks very, very bullish. There's not a whole lot of resistance above. So if that slowly starts marching higher, then I think eventually you can see Bitcoin marching higher. And yeah. Oh, by the way, I see now something else. I don't know if there are any pattern traders here, but this is what my eye is seeing right now. Actually very nice. So maybe this was your based on your entry, I have no idea, or maybe you saw something else in order flow, or let me know. Actually, I'm curious what your motivation was to get into the long. And then I'm going to push a button to get more music. Yeah, so actually you can see even if price action is very slow, it is still kind of respecting trading ideas and targets, right? This is always nice because this is always so biased. Some people say if you have like a falling wedge, the breakout is the measured move from the top to the bottom. Other people say it is always the top of the wedge, and I can show you examples of both. I can show you examples of when it hit the measured move, when it hit the top, when it goes much further, both of it. At the end of that downtrend between the white lines was my motivation. Okay, yeah. Ah, here, probably a break of structure. Yeah, I see what you mean. Right here. Yeah. 100% valid. 100% valid. Yeah. Change of market structure. You even get a nice back test here of these highs. Beautiful. Beautiful. Maybe we get a little bit more heat. That could be. But for now, I wouldn't be all too worried about it because, yeah, like I said, it's just consolidation. You're just kind of creating liquidity here on both sides. The only thing I would be careful of is if you're seeing something like this, right? And then here, this is your lower high, and then we're doing something like this, and you see on order flow that you are creating bearish CVD. So if we then go to Coinalyze. This is very important, by the way. This is how you know if you're on the wrong side of the trade before the actual move. Now, that does not mean that every time this plays out and every time we have bearish CVD, it plays out, you need to get out of the trade, because sometimes also price just pushes higher and then the bearish CVD gets invalidated. This is not 100% proof, but most of the time it works, and especially on Bitcoin I've seen that it actually works very fine. Okay, so you go to Coinalyze, you check down BTC perpetual, then usually always trade the pair that you're trading. This website is completely for free. I usually trade perpetual on Bybit. That means if I win the trade, I get more Bitcoin, not USDT or USDC. I'm getting more Bitcoin. So I'm stacking then Bitcoins, and then if the value of Bitcoin goes up overnight when I'm not in a trade, also the value of my portfolio goes up. Where in USDT it always is 1, right? So yeah. Anyways, this is what I want to show you. Let's say we're getting something like this. in the next couple hours, what I actually just draw out. So you have your high right here, then you have slightly lower highs, slightly lower highs. Let's say that happens here again and here again. But here your CVD goes up in at the same time here as your open interest. What does that mean? Open interest says more positions are opening up. Okay, great. But are those positions then longs or shorts? That is what your CVD is telling you. If the CVD also goes up, that means there are longs opening. But if the CVD goes down, that means there are less longs or shorts are opening. Yeah. So let's say the CVD here doesn't go up but goes down, and your open interest goes up. That means more open positions. Which direction? Shorts, because CVD is going lower. But now in this case, what I'm drawing out, price is constantly making slowly but surely lower highs, lower highs, lower highs, lower highs. CVD is going up and is creating higher highs. It's not the case right now, but let's say it happens in the next couple hours. Yeah, so it's creating higher highs and your open interest goes up. So we're having a scenario where we say, okay, more open positions on this trading pair, Bitcoin USD. What is the direction? There's our longs, we're going higher. But what do we see in price? No new higher highs, right? So it is unable for the new buyers that are stepping in to push price higher and to make higher highs. How is that possible? That is only possible in one way. There is someone here on top that is absorbing these new orders that are coming into the market. So every time you're longing with a market order, because that is what you see here, these are only market orders, there is someone with a limit order, let's say 1 billion short. I'm just making this up, but let's say it's 1 billion short, and they are constantly absorbing these orders, and eventually there are no buyers anymore, because you can only buy until you're out of funds, or you just don't want to risk anymore. Then the buyers are drying up, and then this entity, whoever that then is able to push price lower, and then suddenly you see a big dump down. So it then looks like price is slowly rolling over, but actually you could see here on the CVD and the open interest and the fact that Bitcoin is only able to make slightly lower highs, that it was a bearish CVD, as they call it, or it was absorption. That's also another name for it. That someone is absorbing all these orders, and then we're going lower. So Mr. Bakes, to answer your question, I think for now it's fine, but keep this in mind for the next 4, 5, 6 hours. If you see this and suddenly you really see the open interest or the CVD running higher, so right now it's not the case, but let's say CVD is getting higher above all of these highs, and then I would say look at the 1 minute and 5 minute, then get out of the trade, because yeah, then there's most likely absorption, but like I said, it could be invalidated. So if this is going higher and you see these lower highs, and suddenly you spike up, then there is a higher high, and then the bulls are able to push price higher. So it really could fall either way, but this is just a nice way to look if you are on the right side of the trade before the actual move. And also what I see a lot of people do is shorting the move, because if you have these constantly slightly lower highs and you're doing this and you see this running up, right? So it's very important you have also open interest running higher, because that means commitment in the market, more open positions. Is that some people are even shorting it and then just putting their stop loss above one of these highs and saying, you know what, if we go up, my risk is only this tiny bit because I'm already short, and I'm just waiting for the rollover, and eventually whammy, you have these big dumps on crypto. And we have all seen these dumps, and it looks like, oh, they're coming out of nowhere, where the hell did that came from? And someone entered the market, someone sold, blah 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 blah. Not the case. It was already written in the chart based on the data that you see here. So if you understand how this tool works, it can be super handy, and it can be extremely accurate, especially to tell a story already way before. And therefore sometimes you see that traders are posting stuff on the internet, Instagram or Twitter or whatever, hey, we're going down and I think this is the level. Sometimes they're looking at this bullish bearish CVD. Is there absorption? Are there new buys into the market? No. Okay, what is a possible target where you can go to? Also again based on liquidity, what I just showed you, and then dynamic target. Few hours later, oh fuck shit, oh, my iced coffee just went over. Oh fuck shit. One second. Son of a bitch. Alright, pretty cool. 1 second, be right back. Alright, I'm back, sorry. Okay, well, cool. Well, now everything smells like ice coffee. Okay, cool. Where were we? Oh yeah, so the fact of pushing the price lower or higher based on bullish or bearish CBD. So yeah, I think that keep that in mind, and I hope that this is useful. I also am still leaning more bullish at this time. Also, usually we do not really leave highs on the chart like this. It is much more spiky. I mean, if you look at some of the other highs that we made, you can see it's much more spiky on the top. This one, much more of a spike. This was a bit of a nasty rollover because you have a spike. I think only on the Binance chart this was higher, but most other charts this was lower, and then eventually rolling over. This one was nasty. But just look at the past, look at some of the other highs. They're much more spiky, and therefore I'm thinking, I'm having a hard time believing that this then right here is the top. So far I'm also still leaning more bullish, and I'm looking forward to New York Open. This could be very nice. You see how many alerts are going off during the live stream. I have been charting sometimes so many of these crypto grab coins, and I'm going all places from crypto, alts, stocks, futures, commodities, all kinds of stuff. View on adding capital to winning positions. Yeah. Also here, I think the key word is patience. Patience. Because you can easily fuck this up if you see price running, you have an idea where you want to add, and then that doesn't work out for whatever reason. Then you're going to add to the winning position because you're like, ah, fuck it, everything's going higher, fuck it, I don't want to miss it, I want to add more money, and then it might go into your favor for a little bit until we are rolling over. This is a very good example. Not a key level, but let's say this could be very much the psychology of a trader. You are longing here the absolute bottom, and you think, nice, if I get a nice backtest, I'm going to add to the position. Let's say I'm adding, if we are hitting the golden pocket, which we didn't do on this move, I'm 100% sure. Exactly. Okay, if we are hitting the golden pocket here, I will add to my position. My average entry will then be around that 78.6. I'm going to move my stop loss here, so I'm adding to the position, waiting until price rolls over, right? So this is your first entry, this is your second entry, your average goes to here, and then you just still have your stop loss here. Then price moves higher, I will move my stop loss just after entry, cannot lose on this position anymore. Now I've doubled the size. Could be very much a trading plan. However, then price is not reaching your levels or not reaching the golden pocket. Damn. Okay, you know what? I'm still long here. I'm just waiting. Okay, if we now get a good backtest from this low, or we're taking something out, then I will get in. And then again, you're not getting backtest, and then suddenly you see the squeeze up. You're like, fuck, I missed my moment. God damn it. But then you're just seeing this going higher, and then you're like, all right, you know, fuck it. Okay, I'm just adding here because this baby is going to squeeze up. We have all of this liquidity. Ray also said it already 5 times. This baby is going to squeeze up. I'm just going to add here. Then suddenly your average entry might be somewhere here or might be somewhere here, and then right away you're moving stop loss here. And then more than a day later, suddenly you see that move down, and then you could be stopped out. Like, fuck, if I would just did not add to the position, or did it, or stick to my plan to do it only on key levels and not in this run up, then I would not have fucked up my position so much. Therefore, I would always say stick to key levels, and usually what I like the most is do it based on a backtest. So this is very much here a backtest, right? Whoa, something like this. Or like I just set the golden pocket, and if that means the price goes much higher than you anticipated, and then you have an option to add to the position, just wait it out. Or what you could also do is open a new position, because the thing is, with adding to a position, you're messing up your entry, right? If you have, let's do it like this. It's just now only for 0.5, but let's say you enter here and you add here, what is the average? Exactly the middle, so this is then your average entry, and instead of having your average entry here. So what you could also do is then just open a new position on a key level, for example here, and then just let them, both of them ride. Then you do not touch the long from the very bottom, and you have just an extra. So this could be then BTC USD perpetual, and this could then be BTC USDT. So most likely you need to open up then a different kind, or you just go to a different exchange. If you have multiple accounts, you do both on BTC USD, but then you manage two positions, just only for the reason not to fuck up your average entry. And also see your comment, I could add to my long right now or close it at entry. To be very honest with you, this is the wrong mindset. You should not add to a position that is at your entry, because what has changed here? Okay, before I'm going to answer your question, what has changed between the moment that you open up the trade to where we are right now? What has changed in the trade that you want to add to the position? Please let me know in the comments, and then I will answer your question. Nothing changed. Okay. So if nothing has changed, why would you then want to add to the position? Because if for whatever reason we are dumping down now, are you going to regret it? Very most likely. Only if we are going higher from me, like, oh, I'm happy that I doubled down. But if we are going lower, yeah, you're just going to increase actually your loss. And if you have a rule for yourself, and usually say that's 1 or 2% of your entire account, and let's say again, for example, that $10 where we talked about earlier, if you would then add to your position, yeah, then instead of losing $10, you're losing $20, and you're going to regret it instantly. You're like, oh, fuck, why actually did I do that? You're betting on the fact that we might go higher, and then you increase your profit, but you're kind of losing sight of the fact that it is actually, the outcome is actually random, because no one can predict what the price will be in 5 minutes from now, an hour from now, 4 hours from now. You can only say based on probabilities and what I see, concepts, ideas, liquidity, support, resistance, yada yada yada, the whole shebang. Therefore, it's most likely that we're going to take this direction. Therefore, I'm putting risk on. And what you're pretty much saying to the market is, I want to bet, it's almost like casino. I'm betting for $10 that I think price goes up, and if I lose, I lose the $10, but if I win, I win $20, $30, $40. That is literally what you're saying to the market. I want to put a bet on. I think this is going to happen. This is what I maximum want to lose. This is what I want to win. This is pretty much the same knowledge here what you have with a casino. So would I add here to your current trade? Absolutely not. If you structure it well, you already have an idea of what your risk is going to be, that you can afford to lose that money, right? It's not going to hurt you. It is part of your strategy. If you lose it, it's fine. You go on to the next trade. But only just because we're on an uptrend and you want to add as much as possible to the trade now, because who knows where we are in 2-3 weeks from now, and then you're so glad that you open up a big position. Yeah, but if you're wrong for whatever reason, you know, let's say fucking with Iran, or you have, the Gaza Strip, or so just weird shit, then suddenly you have a dump over the weekend, and this whole story that I just told you is off the table. There are factors in life that you cannot influence, and if this shit dumps, it dumps, and it takes a whole lot of liquidity. And then you're like, if I only did this, I only did that, you know, again, you're going to regret it. What I would then say is, I'm in a trade now, I have it structured, I know my risk. Again, let's say there's $10. If I lose the $10, okay, it's fine. If I win, I'm going to make profit. However, I do expect that the high likeliness is that we are going much higher. I want to add to the trade. What can I do? Then I would say, make sure do not add somewhere here or here, because you're literally then longing in the middle of nowhere. But then just say, okay, you know what, we're going higher. I'm taking profit on key levels, so these highs are key levels. Let's say I'm taking half off the trade, right? So you're making already $20 profit. You're taking half off the trade, great. You're moving your stop loss entry, great. If this thing suddenly dumps down, whatever, you took the profit off. But let's say then stop somewhere halfway at making a higher low. So we're still in the trend. You see that, and then you also see your confirmations, and you're like, you know what, I had my original entry here at the 58k. I see that we are taking liquidity, we're getting something of a rejection, makes a lot of sense. I'm not shorting it because the trend is still up. You know what, I just don't want to short it, that's fine, just more bullish than bearish. I'm very much interested in adding to my winners after I already took profit. So you only have half of the position open, right? And you're going to add that half again on maybe a support level. Your average entry is now between this point and between this point. This is your average entry. And if price goes lower, you get stopped out. It is what it is. But if not, then now from this point on, you have your full position again, which you already took off here, right? Because here you took out half, but now you're adding that half again. Your average entry goes to here, and then you can write it to the upside again. You took profit and you added to your trade. And this is how I would structure adding to the trade. If we are in full bull market territory, and I will also definitely talk about it once we reach that. There are all kinds of ways to signal something like that in the chart, but I mean, we all know those periods of time where the BTC just goes up and up and up and up and up and up. I would not take any profit. Then I would just only be adding. So you go here, I add, and then you can really build up a very big position. The only problem with that is that if you then add here, your average entry goes to here, you add here, your average entry go to here, and you have not taken any profit. So let's say at one point you're on the wrong side, boom, and we're going lower, you're getting stopped out. You have been maybe even a little bit nervous, maybe a little bit stressed, maybe a little bit, I hope this works out. All those times that you were adding and that you had to move your stop loss and that you had to move constantly with price, not getting anything out of it, right? Because you're not taking profit, you're just building out the position and you're betting on the fact that we're just going higher and higher and higher and higher. So this is then a huge bummer once you get stopped out, but there's also a way to do it. And you're doing it relatively without any risk, because once you enter now the first time, so you enter here, your risk is what you're able to lose now. Let's say there's $10. But if you're then keep on adding and your entry is constantly in the middle, so you add here, your entry is now in the middle, there's no risk. If you get stopped out, you get stopped out, but it's at least at a break even because your entry is higher. And then here again, your entry moves up, your average entry, but you also right away move your stop loss. So you do not lose anything other than that you maybe leave a lot of profit on the table, but you do not lose anything. So adding later is slightly quote unquote less stressful. I think trading should never be stressful, but is less stressful, and this could be something without taking profit. But again, I would say take profit on key levels, and then later on add something again if you see something, and then just do it like this, and then you can be taking profits along the way and adding to your position. But do not yank in here a big chunk of your portfolio with the idea, we're going up, I catch the bottom, had a huge positioning, yippee-ki-yay, this is it. Because you can be wrong very, very fast, and even I sometimes am thinking, hey, this level makes a lot of sense where we could turn right now, and it just doesn't happen. Hey, this level, and on something that you feel like, oh, compared to all the levels that we just reclaimed, what's coming up now is relatively irrelevant. That's such a small level, very most likely we're just gonna push higher. Boom, that's the retracement. You're like, oh, you gotta be kidding me, you know? So that's crypto. That is crypto. That shit can just turn on you so fast. But once you have this insane move up, I also will be longing most likely more than 1% of the portfolio, because chances of that you're on the wrong side of the trade is very, very low. What I mean with that is really these kinds of periods of time, and they will come again. Maybe we're in the starting phase, we don't know yet, it's too early, but it's these periods of times. You could hardly do anything wrong here, right? And this one not, this one was shit. That looked very weird in the chart. What else do you have? Here, I missed this run up, by the way, because I had some theories and some ideas, and putting in the bottom, having such a short accumulation time was not in those plans and ideas. But here again, you can see that one time framing up where we just talked about here, beautiful curvature, and just going high. And this is also exactly what I talked about earlier, right? Look at this. Look at here on the top, these percentage moves. This is on the day, 0.3, 0.5, 1, 0.7, and suddenly they're getting bigger and bigger and bigger, and then it's 1, and then it's 2, and then it's 5, and then it's 5 again, and then it's 5 again, and then some consolidation. Everyone thinks, oh, we're going low, and then bam, we're going higher again. That is that ferocious bull market. There's no retrace, we're just going higher, there's no way of getting in, and then you really need to play it to the small time frames on much lower time frames, low time frames ideas to get into certain trades. Alrighty, what time is it? It's almost time for me to go. That's what it is. Are there any last questions in the chat? Is this something you want me guys to look at? This is your chance. Any concepts or ideas you want me to talk over, you want me to explain? I'm here now. You might as well use it. Oh, Mr. Bakes, I have a question for you, by the way. What is your stop loss? What is your invalidation? I'm curious. Which level is that? Could you leave that in chat? I mean, if you want to share it, of course. Oh, wait. Because we had an alert earlier. Ah, okay. How long was streaming for? Hour and a half. Hour and a half. Alrighty. Europe slightly up, States kind of flat, gold, silver slightly higher. Yeah, alright. Do we have any news today? Actually, I don't think so. Okay, no, nothing major today. Okay, so it's just going to be solely on price action. It's funny, this actually, I am long, but this actually also could be a short from these highs. You can see that right here. This is on BNB right now. It is an SFP. We closed underneath, putting a stop loss now above these highs. 100% valid trade. Tight stop loss probably. Yeah, less than 1% for an altcoin. That's pretty nice. And then trade it to the downside. Yeah, yeah. I went long based on the structure, the consolidation in front of these highs. Not really a big move down. I mean, you already have the initial SFP, right? That is this right here. And we had some move down, but not a whole lot actually. And we just backtested these highs, and then we are just creating higher lows. So that was for me a reason actually to go long here and hold it. This for me is a swing play, by the way. And I'm not intending to close it unless we are going to lose these lows here. Then I might close the trade, but other than that, I think we'll just keep it very small position, not even risking 1% of the portfolio. When I am entering these, also I always have a clear invalidation, and I usually tend to hold them a little bit longer. And for me, it's fine if the position is open multiple days. For Bitcoin and Ethereum, usually my position sizes are way bigger. Because they're also less volatile, and I can trade them in perpetual. Like I said, if I'm gaining Bitcoin, Ethereum, and for these altcoins, it's actually pretty much always USDT, which is also fine, but it's not really what I prefer. So that's it. All right, folks. If there are no other questions, remarks, things you want me to talk about, then I think we're slowly gonna wrap it up for today. I'm gonna have some food, and then I will most likely have a look at New York Open, and let's see what the first couple hours bring us. The afternoon session on New York, so if it is after 12 or 1 in the afternoon, is pretty much boring. So if nothing happens on a Friday on the first 2.5 hours, you can pretty much close your computer, close your laptop, and enjoy the weekend. Some people also just do not even trade the Fridays because they already made the money on the first 4 days. So sometimes then the liquidity is also already a bit lower. But yeah, be safe. If anything happens, I might live stream or do something in emergency. Keep an eye out for that liquidity squeeze on BTC, which could happen today or in the weekend. We are very close to all of these highs. I would not be surprised if we're getting it. Also, again, Mr. Base, keep an eye out for bearish CVD in the next couple hours. If that happens, it's probably better to get out of the trade, cut the loss. If you have a very tight stop loss, you could also just let the trade run. But yeah, and any move down with a quick reclaim, 0.5 golden pockets. 0.5 is 57, or maybe a little bit lower, but I prefer only the 0.5, so 57 could be a possible long trade. Everything stands or falls with the first 2.5 hours on New York Open. So be careful, folks. Have a good weekend. Enjoy it. And we talk to each other soon again. And thank you so much for joining. And also don't forget to like and subscribe. I need a bit more followers. And if you have any questions, if you're rewatching this live stream on a later moment, then also just leave me a comment somewhere underneath the videos on Twitter or whatever. I can look at whatever you want me to do. I can do it on a later moment. I'll write it down the next live stream. I will have a look at it, and then you can just watch the next live stream or the video where I talk about your favorite altcoin or topic where you want to talk about something. Again, concepts, ideas, asset classes, something that might be correlated to each other or not. Just let me know in any comments. I will be more than happy to have a look at it. That will be it for now. Enjoy the music. See you guys very soon again. Love you. And like, subscribe, and see you guys very soon again. Bye.